Alright, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good news stuff for you today, and I just want to apologize for yesterday's video because of this. Again, we're at 4,000 now, but for how long? I can literally do a refresh here. Really interesting. Go ahead and do that, MrSotko. Oh, geez. You know what I did instead of hitting the refresh button? I hit the mute my mic button. And so you missed the entire last minute of the video. But I was really just talking about the market. And I was also shilling Sotko Fest, which is December 1st. Make sure you guys follow me on Twitch. It's in the link in the description below. Gonna be streaming December 1st through December 9th. Pretty much all day. So let's just get right into it. And whoops. So first article I want to talk about is that Bitmain is facing a $5 million lawsuit for hidden mining, or essentially pre-mining. So a class action lawsuit with a claim for $5 million has been filed against Bitmain in California. It claims the Chinese ASIC producer eked out hashing power from every machine sold. According to the suit, late model ASICs were designed to mine toward Bitmain related pools during the initiation process. The plaintiff, Gore Gevorkian, wow, this is the best name I've ever heard, I think, claims that previously ASIC had a setup mechanism with a low energy mode that did not start mining. However, as Bitmain's influence grew, the initiation process was changed, and for a while the machine's hash rate could be used. So basically, in a nutshell, the original Bitmain ASICs and the original policy, if you will, was that they would just start them up in a low energy mode to make sure, hey, these are actually working. This is a working model. Okay, push it down the assembly line and ship it on out. But after a while, and we don't know when exactly, they started mining. They did this with the Monero miners, and they released the Monero miners shortly after the announcement that the Monero developers were going to change their algorithm to prevent ASICs from mining on it. Sure enough, that as soon as that algorithm switched, that hash rate went oop-a-doop-a-doop, oh man, and it went way, way down. So they have definitely been mining on their own ASICs for a long time. It is, of course, well known that they have tons of ASICs mining on their own pools and such, but it hasn't been exactly clear if they have been mining. Well, it pretty much has been that they've been mining on their own ASICs before they ship them out to you. So the lawsuit was filed after an extremely successful year for Bitmain, where sales of ASICs kept increasing on growing interest in mining. Both mining farms and in-home miners with several machines may have been hurt from the hidden mining, hence the $5 million price tag for the lawsuit. The lawsuit is yet another challenge to Bitmain's dominance, and it arrives at a time when miners are actually abandoning the Bitcoin network. Bitmain has been seen as a powerful influence not only in mining of Bitcoin, but also for Bitcoin Cash, which it helped sway in recent hash wars. So I hope this is successful, because they shouldn't be mining on their own machines and then sending them out to you. That's what they've been doing for a long time. And then they put the S9 miners on a fire sale. They put a huge sale on them and selling them for very cheap comparatively to what they used to be, and they have probably been, those were the ones that they were probably mining on for a long time. Then they created the S15 ASIC miner, which they were probably have been mining on since day one, and then ship them out to you as profits decrease. So this is really bad. This is, in the sense, like a car manufacturer driving around in their own cars for a while and then selling them, which would normally be a used car and is fine, but then just selling them as a completely new car, maybe just taking that odometer back a few notches. This is like NVIDIA mining on their own cards in a gigantic warehouse. Every one that comes hot off the press, they just slap into a computer and start mining, and then when the profits decrease, they send them out to you as if they are new. So this is a major problem. That is not good business, and it's been going along with Bitmain for a long time. So this is a lawsuit that I fully back and hope wins. Bitcoin ETF is definitely possible, says an SEC commissioner confirms. So, the most notably pro-Bitcoin SEC commissioner, Hester Pierce, appeared on the What Bitcoin Did podcast at the weekend. Whilst unwilling to describe a future Bitcoin ETF as inevitable, she did confirm it was definitely possible. So, Pierce first won the hearts of the crypto community with her statement of dissent, following yet another denied Winklevoss ETF application. In the statement made in July, she publicly disagreed with the commission's law that Bitcoin was not ripe enough, respectable enough, or regulated enough to be worthy of our markets. She felt that the SEC had gone beyond its jurisdiction in assessing the underlying asset rather than the specific market that it would trade in. In the podcast, she reasserts that the SEC has a specific mandate to uphold the regulatory framework. She believes that the SEC should allow for innovation within the framework and not become interventionist. So this is kind of a weird thing for me. Now, I don't like the institutionalization of crypto. I think I prefer, overall, the Wild West version of crypto that we used to have. Now, a lot of exchanges and stuff used to get hacked way back in the day. They kind of still do today, but particularly so way back in the day. Mt. Gox, anyone. You know, if you kept your coin on an exchange and that much coin on an exchange, it might have been both people's fault, both the exchange and you. If you didn't keep them, your private keys, if you didn't keep them in cold storage or on a different hard drive or on a different anything, that is sort of your fault. But at the same time, it's the fault of the exchange as well. And the SEC is trying to regulate Bitcoin, is trying to make sure that it's in the regulatory framework, whatever that means. So this is a good thing and a bad thing. The institutionalization of crypto is a bad thing because it's supposed to be made by the people for the people, yada, yada, yada. Yet at the same time, we need to get rid of the fraudsters. We need to get rid of the fraud ICOs. We need to get rid of the people just taking a ton of money and then putting out a crappy product. We need to take care of everybody when they lose money on exchanges. Somebody needs to pay for that. Somebody needs to, the exchanges, you know, a regulatory framework of exchanges could be saying, hey, like, you have to have insurance on your exchange. You can't just make some random exchange and then if it goes under, everybody loses everything, and that's a big problem. So you need insurance. You need to have the money backing whatever you have on the exchange so that when people get hacked, you can pay them back. That is your fault if you get hacked. So that's something the SEC can help with and make, again, a regulatory framework over in the sense that, you know, regulating things, making sure that ICOs and frauds and stuff like that are dealt with, which is a good thing. But again, at the same time, it is sort of the institutionalization of crypto, which is just totally defeats the purpose. So it is what it is, and I'm not the one doing it. Don't shoot the messenger, guys. But anyway, moving on here. So that's a good thing, though, that you know, we have some pro-Bitcoin SEC commissioners at the very least. Next article here, Ethereum futures, Bakkt hints it's open to altcoins. So far, Bakkt has not even made Bitcoin futures yet. It's not till January 24th, but already Bakkt has been asking people. I've seen, you know, like tweets and articles about Bakkt, you know, asking people, hey, what other altcoins should we focus on? Should we focus on other altcoins? Should we bring up, you know, Ethereum or Litecoin? They haven't really specifically said anything particular, except for now with Ethereum. But they're deciding on other things as well, which could be good. So Bakkt will consider non-Bitcoin contracts. So in a tweet, executives said they would take into account customer feedback as a major motivating force when deciding which cryptocurrencies to support in addition to Bitcoin. So kind of like exchanges asking in tweets, hey, what should we add? You know, like we'll vote on between these 4 cryptos, and that's what we're going to add. So Bakkt had eyed December 12th as a launch date for its first product, physical Bitcoin futures, but last week abruptly postponed its debut to the end of January. So we'll consider additional contracts as the landscape evolves and as we receive additional customer feedback about what they want and need. So no specific assets were mentioned while commentators continue to debate the nascent platform's potential impact on Bitcoin markets. So question, we've been asked if we will add other digital currencies. Answer, we'll consider additional contracts as the landscape evolves and as we receive additional customer feedback about what they want and need. So a little bit premature. Days before the company confirmed the postponement, BTC had begun plummeting to lows, which ended up at 3,700 and now even lower, constituting an almost 40% drop in value. Volatility, some said, could have been due to insiders knowing about the Bakkt decision beforehand and selling their holdings, which they had previously accumulated on a December launch. So while multiple Wall Street heavyweights have no plans to offer institutional investors cryptocurrency-related instruments, Bakkt remains the likely first to serve the market, sparking hopes an investment influx could reverse Bitcoin's ongoing bear market. So very unfortunate. So possibly, the crash in price, I believe, is from a lot of things. I think CBOE futures expiring, the Bitcoin Cash hash wars, also Bakkt pushing futures back to the 24th. So people are just dumping, waiting to get in at a lower price before it goes up. So we have an interesting outlook. The rest of the year, I think, is going to be nothing but probably even more bear market. There may be a little increase in December, barely, but there is another CBOE futures expiration on the 19th of December, which is going to be a real good time to drop the price of Bitcoin. And then we have, after that, of course, January and February. Now, traditionally, January and February are terrible months for the market. If you look at CoinMarketCap or any kind of chart or anything like that, it never looks too amazing in January and February. Sometimes you'll see a little bit of a run in January, but for the most part, historically, they're just not particularly good months for bull runs. So that's not going to help us either. So expect much lower prices, and we'll have to see if Bakkt raises those prices January 24th of next year. So mining rigs are going offline and led to a hash drop in November. So Bitcoin's hash rate suffered a marked decline in November. And the reason may go beyond Bitcoin Cash hash wars, which redistributed some of the hashing power. But yeah, a lot of the hashing power. It could be attributable to the outright shutdown of mining rigs and a reversal of the ASIC arms race of past years. The drop in mining activity comes at a time when Bitcoin has started trading below 4,000, a rate deemed unprofitable for miners. So a Chinese cryptocurrency source has pointed to cases of selling mining rigs by the kilo. Tens of thousands of Bitcoin miners were shut down due to the recent market crash, according to the co-founder of F2 Pool, one of the largest, oldest mining pools in China. Now, so you might think to yourself, well, okay, so people are shutting down, so the difficulty is going down, so it should be profitable. Well, it may become profitable if enough people shut down, and it may become profitable eventually and will regulate itself to these low $3,000, $4,000 prices. Sure, but as soon as it regulates lower to some degree, now, people are just going to turn back on their miners. Boop, boop, boop. They're just going to turn them right back on, and that difficulty is going to raise up. So we actually need an equilibrium, trust me, I can talk, of prices and difficulty. So you can't just have super high prices, or super low prices and super high difficulty, because then nobody's making money, and they have to shut off. So then the difficulty goes down, and profitability comes back up, but people realize the profitability comes back up, so they turn on their miners, so that raises the difficulty again. So if the difficulty raises again, prices have to raise again because to remain profitable. If they don't raise again, the difficulty is just going to raise above the profitability level, and it's going to do it again and again and again. But it theoretically can stay at 3,000 or 4,000. There's no reason it won't, but it's very difficult for big miners to make money. So it is uncertain whether the videos are recent, and some believe they belong to a previous crash in mining, which occurred when floods hit China, talking about the throwing out Bitcoin miners. But in the past 3 months, the growth in hash rate has stalled, ranging between 40 and 60 exahash after months of exponential growth. In the 30 days, the removal of mining operations has led to a 7% decline in difficulty. And in the past 3 months, downward difficulty adjustments came one after another. So people giving up the mining, but the more people that give it up, the more profitable it is for the people that stay in it. So it's kind of a weird situation. Interestingly enough, Bitcoin dominance down to 52.9% on CoinMarketCap. So that means that Bitcoin suffered quite a more loss than some other coins. However, I would attribute that Bitcoin dominance loss of about 1% or so to this Bitcoin SV. This is very interesting. CoinMarketCap has now officially added Bitcoin SV, which is just BSV now, and not BCHSV or anything like that. So it's just BSV. Has a market cap, interestingly, of $1.8 billion. It is up 23%. But what is most interesting about this is that no other coin is up. As we can scroll through here, we can see True US Dollar is up, USD Coin. Those are both stable coins. We have Maker up a little bit. But for the most part, as you can see, just nothing else is up. Once in a while, we have a coin in the green. Nothing else for the most part. And yet, so I think this is just a pump of Bitcoin SV. I think this might be Craig Wright and N-Chain and gang just pumping a ton of money into Bitcoin SV to make the price go up, to make other people buy into it, to make other people believe in it. But I don't believe in it at all, because it's just, it caused Bitcoin SV was the main cause. Now, you could say it was Bitcoin Cash that caused it, but here's how the story went. Bitcoin Cash was already undergoing a fork, and Bitcoin SV come along. Just to put it in a nutshell for you guys, Bitcoin SV comes along and says, "Hey, we could beat your hash power. We can be the real Bitcoin Cash. We want to take the BCH ticker." And so they're like, okay, well, let's race. And they both raced, essentially. Hash power went crazy. They took all the hash power from Bitcoin. They pumped a bunch of money into that hash power. They dumped a bunch of Bitcoin and went off. Bitcoin Cash ABC won. So now Bitcoin Cash ABC took the BCH ticker. So now Bitcoin Cash is essentially Bitcoin Cash ABC. Your original Bitcoin Cash is gone. It no longer exists. And before that, Bitcoin Cash was $500. Now it's $174. Now Bitcoin SV is $107. So basically, Bitcoin SV provoked that war. If Bitcoin Cash did not put all their hash power into Bitcoin Cash and dumped a bunch of Bitcoin for that hash power, they would have lost the BCH ticker, and you really can't blame them for that. Not that I really actually care about Bitcoin Cash. You can't blame them for that, because they were just defending their product, if you will, even though I think it's sort of a shady product. So Bitcoin SV was the one that caused that, and Craig Wright. So head on over to Craig Wright's Twitter and tell him what you think about that. Tell him what you think about 121 billion market cap. Tell him what you think about a $3,688 Bitcoin. Tell him what you think about your Bitcoin Cash, if you liked Bitcoin Cash, and how it used to be $500, but now it's $174. Oh, but you got Bitcoin SV too. It still doesn't equal the same amount, so you're still out 50% or so from your original investment. Congratulations. So that's who you can blame, N-Chain and Craig Wright. So unfortunately, that's how it is. But that's all I have for you guys today. I hope you guys enjoyed this episode, and as usual, I will see you guys next time.